All right, so to financial services now and the FX market. The Central Bank of Nigeria have approved licenses for BDC operators to participate in the Nigerian foreign exchange market, as NFM, to boost retail FX liquidity and meet the legitimate needs of end users. Under the new directive, each BDC can purchase up to $150,000 weekly through any authorized dealer bank at prevailing market rates. The CBN says the measure aims to deepen market efficiency and expand access to foreign exchange across the economy. Central Bank imposed restrictions and compliance requirements mandating that authorized dealer conduct full KYC checks on clients, and that all BDCs submit timely electronic returns. Unused FX must be returned to the market within 24 hours, and BDCs are prohibited from holding FX positions. All right, let's unpack this now and other matters with Oladipo Jai. He's the head fixed income at Chapel Hill Denham. Great to have you on the show, sir. Good morning.
Good morning, Ladi. Thank you for having me this morning.
Fantastic. It's great to have you. So we have the BDCs again getting attention from the central bank at this point, up to $150,000 weekly in foreign exchange. How's that going to affect liquidity in your view? Because we're noticing there was a gap growing fast between the official window and the parallel market. What does this do to that?
Well, if you can remember vividly, when the central bank released their FX framework, sometimes, I think it was about 2 years ago, part of the framework is the institution whereby BDC will actually be licensed. And after being relicensed, they are allowed to actually also partake in the NFM window. And at a point in time, they even mentioned that BDC will be the one actually interfacing with IMTOs. And but recently, we've seen a bit of gap between what is happening in the official market and the prices at the parallel market. And the gap could be attributed to the number of BDC that have been relicensed. Just only 82 BDC have been relicensed. 80 of them were relicensed for Tier 2, while it's only 2 that actually met the Tier 1 license. And so it simply means that the weekly $15,000 was only allotted to only 82 BDCs. And in the past, we do have over 5,000 BDCs that on a weekly basis get allocation from central bank. And that has one way or the other catered for the retail segment of the market. But now that we just have only 82 BDCs, so it simply means that there's been that shortfall to that segment of the market. What I think has been helping to actually augment and actually to a good extent keep the spread still tight as what we have seen is just because for a long time now you can now access FX or utilize your card to actually buy make payment for FX transaction, and that's one of the reasons why we've not seen the gap widening beyond what we are currently seeing. What Central Bank has done is a bid to actually further tighten the spread. As at yesterday, the spread is close to 100 because when you look at where prices are actually trading at the parallel market and where it's trading at the official window, so you have a spread of like 100, and that for me that is actually massive. And if CBN don't actually come out and handle things the way they've done now, I will get to a level where we'll create more like a rent seeking. And at the end of the day, that will further weaken the current FX framework. So it's actually a very good one because it improves the supply to the market and will further tighten the gap between what we are seeing at the official window and the parallel window.
All right, and looking at some of the rules set by the central bank now, there's strict compliance requirements. The authorized dealers must conduct full KYC checks on clients, and unused FX must be returned to the market within 24 hours. Do you think the BDCs will, face some challenges, complying to these rules?
Of course, I know very well that BDC knows that it's a new terrain, and it's more like there's a new chariot in town. And that's one of the reasons why for a long time the BDCs were actually suspended from the whole financial market before the central bank actually brought them back. And on their coming back, they understand the rule that there will be rules to actually follow. And some of these things have been communicated to them in advance. And what central bank is just trying to do is to ensure a more like a robust market, and at the same time ensure a market that's actually very, very transparent. And when the central bank says that if you don't utilize any FX, you must return it to the market within 24 hours. What it simply means is that you are not expected to hold position. And so it simply means that the days where BDC will actually store dollars, those days are gone. It's not a time where you take position. It's basically a business where you actually intermediate between central bank and the final user. And what are the final users? There are people that needs money for traveling, the PTA, the BTA, the people paying school fees, and also people that are actually going on medical tourism. And so I don't think it should be very difficult for them to actually communicate their report back to central bank. And central bank, one way or the other, has designed more like a platform where you can actually send back your report to them as fast as you can. And don't forget that that's the same model that they actually ran or tested on the FM platform when it was newly introduced to the market. Banks were supposed to actually send their reports online real time. It means that immediately you are consummating the transaction, the central bank is getting the report around the transaction that you just consummated. But what the central bank is doing for BDC is to give them a time that you actually need to report within 24 hours. This is still not a bad one. So I think that it should not be very difficult for them to comply. And for those that actually met the requirement, they know that it's not a big business. So it's not a business where you need a 10 million naira to actually get a license. If you need as much as 2 billion to get a license for a particular business, or 500 million to get the second tier license, so it means that you know that it's capital intensive, and as such, you know that you need to actually improve your technology, and that is one of the things they will need to actually survive in this climate.
All right. Also, this week, we see the CBN has been quite busy. They recently confirmed the full operational deployment of its scriptless securities settlement systems, commonly called S4, an exclusive infrastructure for the country's primary market auctions of government securities. It's been there before. That's the S4. And now we're seeing full implementation. Why now?
So the end goal is not even the primary market. The end goal is the secondary market. The central bank is actually moving towards a situation whereby they can actually capture the whole market segment. Beyond the primary market overseas, they also want to have oversight around what's happening in the secondary market. What they've done on the primary market is just to ensure that give a signal to the market around the fact that they want to take full control of what's currently happening in the market. So what's being done currently is the fact that when you're going on any bid, you send your order to the bank, and the bank collates, and the bank actually will input it to the S4 system. And at the end of the day, what that brings is transparency. You can actually see the market, and there's no ambiguity in that. And like I mentioned, the end goal is to now get to a level where they can also have oversight on what is happening in the secondary market. The central bank wants to know where the funds are coming to, and they also want to see in what security this fund being invested. And that's one of the reasons why the central, and they mentioned this in the bypass, and they want to have full control and oversight of the market. And we've seen them done that in the FX market through the FM window. And that's exactly what they are also trying to do in this segment of the market.
So in your view, what are the biggest benefits of centralizing, primary auctions through the S4?
So one thing is that if you have the days, and take us from the days where we need to wait till late into the night before we get the result of an auction. So it simply means that the result for an auction can quickly be concluded, and the buyers or those people that participated in the auction can get their results as quick as they can. So I think it's actually a very good one. And also, like I mentioned, it's more like to have oversight of the market. And we've been seeing a lot of foreign investors coming into the market. So you can actually be now, the central bank will be able to actually trace in what part of the market are they actually investing. Are they investing in treasury bill? Are they investing in bond? Or maybe they are even pushing the money into the capital market, into the equity market. So this would actually help the central bank in that regard. And also, at the same time also, it actually could also help the central bank with data. And don't forget that you need data to plan, you need data to make decisions. And so now the central bank will now be the custodian of the data around some of these things, and it will help the country to also plan around issuing debts.
All right. So what about investors that play around those markets? What's in it for them?
Well, there's nothing so out of place for them. The only thing that is important for them is transparency. It's just like you asking around what happened to people actually playing in the FX market before now. So it simply means that if there have been a lot of rent seeking, then that will be out of the window. And so that's exactly what will happen also in this segment of the market, because central bank will have oversight of the market. They know where the prices are at. So it means that they follow prices, they know where the market opens, they know where the market closes, and so they can also have an idea of the range trade in between the day. And so I think what it brings to the market is transparency, and also it will also further help in deepening the market liquidity.
All right, definitely we did see the Naira closed very strong last week at the official window, over 1% gain for the whole week last week. And, we're seeing some strengthening already in the market this week. What are you seeing for the Naira this week?
Well, I think the Naira will continue its winning streak. We've seen that happen last week. And I think this Naira would have even gained more than what we saw last week. But the central bank was in the market last week to also participate in the market, where they actually bought over $72 million from the market. And what that has done is actually reduce the rate at which the market actually gained. And last week, it's a way to actually stabilize or reduce the rate at which Naira is gaining. But we've seen that continue this week. So for me, I think Naira will continue the winning streak because we have a lot of value in the market. In the equity market, our market is still very much underpriced. You look at the bond market, yield currently around 16.5, not a bad one when you compare to what's happening globally. And also look at the treasury bill space as well. For people looking at short-dated instruments, you can still get effective yield of close to 20%, and not a bad investment. And also, the central bank is still very much in the open market, trying to actually reduce liquidity in the market. And with that, you can still get effective return of close to 22%. And when you look at all this, of course, it's something that can actually want to lure investors into the market. And I think that Naira will also continue to gain in this regard.
All right, let's look at the arsenal for the central bank at this point. The FX reserves. And that's been growing, so far. What are you seeing there? Any latest trends?
I think we've been seeing a lot of pressures on the reserve, and that's a very good one. And one good thing about central bank is that they've been very, very conservative around that. You've not been seeing central bank coming to the market to actually push liquidity back anyhow. The central bank only attends to market when there's illiquidity, or when they notice that their demands are heavily outweighing the supply to the market. And one way or the other, that has helped actually conserve our reserve. And the good thing for me is that that will help the central bank to actually prepare for the rainy days. And don't forget, sometime last year, I think it was April 3rd, the Liberation Day, there was a bit of crisis in the market where we noticed a bit of pressure on the currency, but the central bank was able to actually rise up to the occasion because of the robust reserve that we were sitting on at that particular point in time. And so the central bank is still learning from what has happened in the past, and as a result, they are actually helping planning to find a way to actually ensure that nothing of such actually happens in the future, where investors are unable to actually leave the market because of capital control.
All right, so much to unpack there, and definitely we'll keep tracking what plays out in that market. Thank you so much, Mr. Oladipo Ajayi. Is a head fixed income at Chapel Hill Danham. Thank you for coming on today.
Thank you very much, Ladi, for having me this morning.